All right, let's talk about a metal that's, both ancient and totally critical for our future, silver. We're going to break down its price and figure out what makes it tick. So let's jump right in with the big question. We all hear about gold's price, right? It's treated like this stable benchmark for the economy. But silver, its price can feel like a wild roller coaster. So what's the deal? Why is it so much more volatile and, frankly, unpredictable than its famous cousin, gold?
Well, the answer is actually pretty simple, but it's also really complex. It all boils down to one core idea. Silver is basically living a double life. It has this unique dual identity that's constantly pulling its price in completely opposite directions.
So let's really unpack that idea. A metal with two faces, the core conflict. Seriously, this is the absolute key to understanding everything about how silver behaves in the market. Okay, check this out, because this perfectly explains that split personality. On one side, you have silver, the industrial metal. It's absolutely essential for things like solar panels, electric cars, and pretty much all of our electronics. That demand skyrockets when the economy is humming along. But on the other side, it's also a classic safe haven asset. Something people buy when they're scared about inflation or the economy tanking. You see the conflict, right? One half of its personality loves a booming economy, while the other half loves a fearful one. Here's a great way to think about it. It's like this constant tug of war. On one end of the rope, you've got a factory owner who desperately needs physical silver to build stuff. On the other end, you've got the classic gold bug investor who's buying it up to protect their wealth. These two are almost always pulling in opposite directions. All right, let's dig a little deeper into this tug of war, and we'll start with the demand side. Who exactly is buying all this silver? This chart, wow, it's incredibly telling. A full 50% of all the silver demand in the world comes from industrial use. That's a massive, massive slice of the pie. The other half is then split between people buying it for investment, coins and bars, and for traditional stuff like jewelry. But the main takeaway here, industry is the single biggest customer for silver. And this isn't demand for old school parts. Silver is right at the heart of our modern high-tech world. The green energy transition with solar and EVs, the rollout of 5G, all of our consumer gadgets, even advanced medical tech, they all need silver to work. So this demand is not just big, it's structural, and it's growing. But then you have the complete opposite force at play, investment demand. This isn't driven by a great economy, it's driven by fear. When people get nervous about economic uncertainty, or they see inflation creeping up, or there's instability in the world, they run to precious metals. And because silver is so much more affordable than gold, it's often called the poor man's gold. It's just a more accessible safe haven for everyday investors. Okay, so we've got a pretty good grip on demand. Now, let's flip the coin and look at the other side of the equation, supply. Where silver actually comes from is just as weird and unique as who buys it. Now, this might be the single most surprising thing we talk about today. Most silver isn't actually mined on purpose. Get this, only about 30% of the world's silver comes from mines where they're actually looking for silver. A staggering 70% is just a byproduct. It's what they happen to find while they're mining for other stuff like copper, lead, and zinc. Now think about what that means. Even if the price of silver goes through the roof, miners won't necessarily dig up more of it unless the price of copper or zinc also makes it worth their while. The supply is what economists call inelastic. It doesn't stretch easily. And that inelasticity, well, that's a key ingredient for volatility. When you get a sudden spike in demand, maybe from a new green tech boom, the supply can't just ramp up to meet it. It's kind of locked in, tied to the economics of totally different metals. So this mismatch, this clash between fast-moving demand and a really rigid supply is what fuels those sharp, dramatic price swings. So with all these forces pulling in different directions, how can you possibly make sense of silver's value at any given moment? Well, there's a pretty simple indicator that analysts use called the gold-silver ratio. It's a really straightforward idea. It's just the number of silver ounces you'd need to buy one single ounce of gold. So, for example, if gold is trading at $2,000 an ounce and silver is at $20, the ratio is 100 to 1. Simple as that. So why is that number useful? Well, because we can look back through history, and on average, the ratio has tended to hang out around 60 to 1. This gives us a baseline, a sort of historical benchmark we can compare things to. And here's how you can interpret it. When the ratio is really high, say 90 to 1, it means silver is historically cheap compared to gold. For some analysts, that's a signal that maybe silver is undervalued. On the flip side, a low ratio, like 40 to 1, suggests that silver is getting pretty expensive relative to gold. Now look, it's not a crystal ball, it won't predict the future, but it's a really powerful tool for getting some historical context and maybe spotting when things are at an extreme.
Okay, so let's tie this all together. Here's a simple 3-step framework you can use anytime you're thinking about silver's price. First, ask yourself, what's the real economy doing? Is industrial and green energy demand on the rise? Second, what's the investor mood? Are people feeling fearful and looking for safe havens? And third, where is that gold-silver ratio right now compared to its historical average? If you could answer those 3 questions, you've got a really solid grasp of the big forces at play. Which really leaves us with one last fascinating question to chew on. After all this, is silver really an industrial metal that just happens to be precious? Or is it a precious metal that has a very demanding day job? The tension right there in that question, that's exactly what keeps its price so dynamic and so interesting to watch.